Good afternoon again, everyone. Thank you so much for joining our webinar today on rental feasibility. My name is Katie Nagy. I am the coordinator for the Affordable Housing Program. If you're thinking to yourself right now, hey, that voice does not sound like the same one I heard in the last two webinars, you would be correct. I work directly beneath Dusty, who is the one who did the last two webinars. But don't worry too much. Dusty is still on our call today and is going to be helping monitor questions and things like that, helping answer your questions regarding feasibility. But for today, you've got me. So excited to be talking to you today about rental feasibility for the AHP application process. A few housekeeping items I want to cover before we start diving into content today. This presentation is being recorded and will be posted to our public website so that you can view it again. Sorry. Are we having audio issues, Jesse and Dusty, from my end?
I can hear you, Katie.
Yeah, there's no
No echo.
no
Okay.
feedback or echo on our end.
Okay. Thank you. Sorry, I wanted to double check to make sure we're not having issues across the board. All right. So a few housekeeping items. Again, this presentation is being recorded and will be posted to our public website. So if you miss any part of this today or you want to share it with anybody else down the line, please feel free to do so once we publish that. In addition, the previous week's webinars that we have done are also available on our public website in case you have missed one. So feel free to reference back to those and view those recordings of our AHP application essentials and our scoring commitments webinar that have happened the past 2 weeks. If you have any questions during the presentation, please enter them in the chat or the Q&A boxes, and we will address all questions at the end of the presentation. So Dusty will be monitoring those, and we'll make sure that we cover as many questions as possible. If you have any project-specific questions, though, we do ask that you email us on the back end later after the presentation so that we can help address any project-specific questions, just to make sure that we keep the content of this presentation as informative as possible for our general audience. Then also in terms of rental feasibility, again, we say this is a rental feasibility webinar. We are only going to cover rental content today. So if you are working on a owner-occupied application, this content will not be applicable to your project and will probably look very confusing. So please make sure if you are on this presentation today, this is strictly for rental projects. Owner-occupied projects, we will be releasing resources here in the coming weeks, including some recorded videos to help assist you with the feasibility and application processes. All right, so with that, I'm going to go ahead and dive into some general tips concerning feasibility and some of the content we're going to cover today. So the main things we're going to cover today in terms of forms are the rental feasibility workbook and the targeting and income workbook. That's going to be the main focus of today's presentation. Both of those are Excel worksheets that are available for download on the public website, and I will show you where to locate those. But first, when talking about these forms, I want to make sure that you do not use Google Sheets or Google Docs to fill out your workbooks. Our system is very picky about the workbook, the formatting, the formulas, things like that when you try to upload it to the application. And if you use Google Sheets, it breaks a lot of those formulas and it will not allow you to upload it to AHP Online when you reach that point. So please do not use Google Sheets or Google Docs in general to fill out AHP forms. Also, please do not copy or cut and paste information within the workbook. I know sometimes we enter the wrong piece of information in a cell and we need to move it to a different one. If you can, please avoid using that, especially cut and paste, to move information around. It can cause issues with the formulas and break some of the formulas in the workbook. In addition, please make sure you're using the correct feasibility workbook template. Our public website, if you venture through all of it, has a couple of different feasibility workbook templates for our rental projects. I'm going to show you specifically where the one for application is, and you need to make sure you use the application feasibility workbook. Again, your workbook will not upload to the system if you use the wrong one. So please make sure you're using the correct template. Last but not least, the feasibility guidelines that are built into our feasibility workbook are in Exhibits A and B of the implementation plan. These are all built into the feasibility workbook again, but if you want to see the full text regarding what our guidelines are in terms of feasibility, you can view those in, again, Exhibit A and B of the implementation plan. The location of all those guidelines in the feasibility workbook are going to be covered as I continue and go through the feasibility workbook. So first, again, we're going to cover where do you find the feasibility workbook template to even begin filling it out. So right now I'm currently showing the AHP public website. If you have not been here before, FHLBTopeka.com/AHP. You will want to get familiar with this website if you aren't already. This is where all the forms and resources are going to be to help you through the application process. Once you are here, you can click the application button on the left-hand side. And it's going to take you again to all the resources specific to application. For our applicants, you should not need to leave the application section of the website to find all the forms, user guides, things like that that you need to complete the application. So if you get down into disbursement and monitoring and resources and forms down here, you're in the wrong section for application. Please stay in the application section here. To get to the feasibility workbook, you'll scroll down and you'll see 3 bold headers down here near the bottom of the application section. Again, the one we're focusing on today is our round forms off to the far right side. And then the third document down you'll see is the feasibility workbook for rental applications. So you can download this here. Again, please make sure you use Microsoft Excel when opening your workbook and filling it out. So I am actually going to show you a completed workbook today to do our example so that it gives you a little bit more life to the numbers and things like that that could go into a workbook instead of a blank one. If you have any questions, again, specific to your project and the numbers that you're putting in your workbook, feel free to reach out to us after the presentation concludes via email or phone call. So I'm going to go ahead and open up the feasibility workbook that we're going to walk through today. Again, this is just an example, so the numbers in here are totally made up and are just kind of generic numbers, so bear with me from that front. We're going to start with the project information tab. This tab is really generic information regarding your project. A lot of this is information, at least the stuff at the top is information you'll be entering in the application itself. So you'll want to make sure that when you're filling out things like your project name, the county that the project is located in, the project type, and the construction type, it matches what you have entered into the application itself. After you've entered the basic information at the top for the project name, county, everything like that, you'll go through the project characteristics section. The project characteristics section is a lot of information that is mostly focused on helping us with what we call our construction cost reasonableness review. So during the application review process, as well as monitoring processes down the line, we are required to assess the costs presented by each project to ensure they appear reasonable given the current construction cost environment. So in order to complete that review, we need specific square footages and scope of work details. So this project characteristics section helps assist us with some of those details that we require. Of course, in addition to this project characteristics section, we will also be asking you for copies of estimates or bids, as well as architectural or site plans that need to be uploaded to the application itself to round out that information and help us complete our review. But we'll just cover the project characteristics section here today. The first section I want to talk about is regarding the floor area of all buildings section here. So there are three different sections to break out your square footages into. There is your residential space, your community and amenities, and your non-residential space. The big thing that I want to note here is the difference between residential and non-residential space and what we define as non-residential space in the AHP program. So the implementation plan, if you look at the specific definition in the definition section, the definition is going to tell you that this is generally referring to a building, space within a building, or property used for business, other commercial purposes, or for supportive services. So that is what our definition is for non-residential space. Again, that's directly from the definitions section of the implementation plan. A few examples of what we would consider non-residential space to be. This can include retail space if you're doing a mixed-use property. This could be doctor's offices or mental and behavioral health offices. This can also be spaces that are offering services to the general public. So again, if you have any sort of medical offices, things like that, that will be serving general public or other general public amenities, that could also be considered non-residential space. So if you are uncertain, if you have non-residential space in your project, please feel free to reach out to us. We'd be happy to figure out if it's something we would consider non-residential, or if it may just be considered an amenity or a community space for the residents of the property as a whole and still be considered residential from that front. The reason that this differentiation is really important is that non-residential space is not considered eligible to receive AHP subsidy. So when you enter the square footages here, that's going to impact how we divide out the costs in your development budget to determine how much of your costs are allocated to non-residential space, so that we can determine how much AHP subsidy we are able to provide. So again, please make sure to check if you actually qualify under the definition of non-residential before marking square footage there. Continuing down the left side of our project characteristics, you have your total number of buildings on the property, the size of the project site in acres, if there is an elevator or not on the property, or elevators, if there are multiple, and then Davis-Bacon wages. In terms of Davis-Bacon wages, this is union wage rates. So if your contractor is using union wage rates, that's what we're looking for here. This does impact the total costs on the project. So we want to make sure we're using the right rates. You are not required to use Davis-Bacon wages for the AHP program. We do not require the use of Davis-Bacon, but if another funding source requires it, or you are otherwise using a contractor who is charging union rates, please make sure to indicate that here so we use the correct wage rate in our analysis. Moving to the right side of our project characteristics, we're then going to deal with the number of units and the size of those units. So the top section, again, is the number of units. It is broken out by the type of construction that is being completed. So we have acquisition, rehab, and new construction. If you have units that are being acquired and then rehabilitated, they should only be included in the rehabilitation line. The acquisition line is for acquisition only. So if you are acquiring them and you are not doing any rehabilitation to them, they would go in acquisition only. If they are being acquired and rehabilitated, it'd go in rehab. Or if they're just being rehabilitated straight out, of course, that would be rehab as well. And then new construction as our third category. The main goal here is to make sure that your total number of units is equal to the total number of units in the project. So this should match the number of units you're entering in your application and in your targeting. Moving down to the right, some more here. We then are looking at square footages of the units. So when we're looking here, we're not looking for total square footage of all the units. We kind of cover that with the building floor areas up above. What we're looking for here is the average size of each size bedroom unit. So a single SRO unit for this one is 450 square feet. So each unit's about 450 square feet. If your units range in size within bedroom category, so say you have some one bedroom units that are 550 square feet and some one bedroom units that are 650 square feet, you can enter an average in here of what the average square foot for a one bedroom unit is on the property. If you have any units that are larger than 3 bedrooms, so you can see we kind of stop here at 3 bedrooms, feel free to enter information regarding any bigger units in the explanation box at the bottom of the page. In addition, this explanation box can be used to explain the non-residential space that's being utilized to confirm that it meets the AHP definition so that we're not asking that down the line from you. All right. That's going to wrap up my discussion on project information. I'm then going to move to the next tab, which is going to be our development budget worksheet. The development budget worksheet is going to first cover, again, non-residential space. I know this sounds kind of redundant. So it feels like maybe we've asked this twice. But again, we want to make sure that we are including non-residential where it is applicable and we're not including it if it's not applicable so that we get the right amount of AHP subsidy. So if your project has non-residential space, you will answer this question up above, yes. For my example today, I did answer it yes so that you can see it. If you did answer this question no, you would see all these numbers are hatched out and you would not need to fill out anything in this non-residential column. So this is what it would look like if you don't have non-residential space, and this is what it would look like if you do have non-residential space. Again, the non-residential column is actually has formulas in it that are going to automatically assume the amount of costs that are allocated to non-residential based on the square footage that you entered on the project information tab. So in this case, you can see it in my project information tab. I said 2,000 square feet of my 20,000 square feet, which is 10% of my total square footage, is allocated to non-residential space. So my development budget worksheet is automatically assuming, you can see if I put a new number in here, it's automatically going to take 10% of the cost I enter in the total budget amount, and it's going to enter it into the non-residential column. You can override those numbers. So if one of those numbers pops up and you're like, nope, none of that cost is going to be allocated to the non-residential space, or maybe it's less, or maybe it's more, you can overwrite those numbers and change them if they do not appear accurate based on the actual budget that you have in hand. Okay. From here, I'm not going to cover every single line item in the budget because that would take us a very long time, of course, but I do want to cover a couple of important items that we are commonly seeing errors with or that we get a lot of questions about during our review. The first being in the land and building section here at the top. In land and buildings, there should only be land and building acquisition costs in the first two lines if acquisition is part of the AHP project. So make sure if you acquired the property, back in 1980, you've been operating it since then, and you guys are now rehabilitating that property that you've owned for a really long time, the acquisition is not part of the project. So we just want to see acquisition here if it is part of the AHP project. In addition, if you have committed to the donated property scoring commitment, and if you'd like additional details on the donated property scoring commitment, go back and watch our webinar from last week on the scoring commitments. But if you have committed to donated property, the land and building section of your development budget should accurately reflect this. So if you've said that you did not incur any acquisition costs, we should not see any acquisition costs, or we should see that de minimis costs here that your documentation and that scoring commitment confirms. Okay. Next, I'm going to skip land improvements and I'm going to go to the construction and rehabilitation section here. The main point I want to make here, so we've got new construction costs as well as rehabilitation costs. So you can break that out based on if you're doing a mix of both or you're doing one or the other. But The main thing I want to point out here is our general contractor fees. So we have general requirements as well as general contractor overhead and profit. If you are utilizing a general contractor, please make sure that your general requirements and your GC overhead and profit are broken out from the actual construction costs. The reason we ask for this is that the general requirements as well as the overhead and profit are related to guideline items for our guideline standards and our implementation plan. So we'll need to make sure those items are broken out so that we can make sure that those fees are within AHP guidelines. All right, moving down. I want to talk about not professional fees, construction interim costs and permanent financing. In this section, again, not going to cover everything, but wanted to point out the origination fees. So construction loan origination fees are in this construction interim cost section. And then we have our permanent loan origination fees down here in permanent financing. Of course, this is as applicable. So if you do not have any of these fees, you do not have to fill those in, of course, if there's nothing to fill in. But the loan origination fees that you enter here should match what is entered on the sources of funds worksheet, which we'll look at next, as well as any documentation you provide to back up those sources of funds. So we will ask for documentation to verify all sources of funds that you're planning to utilize to pay for your costs. So if you have any sort of origination fees, we're going to be looking to verify those amounts based on the documentation you provide. That could include a promissory note, a loan agreement, the member financial participation letter if you're doing the member financial participation scoring commitment, a letter from the lender verifying the expected terms on the loan, things of that form. So please make sure that those amounts match in each place that you are entering those numbers. Continuing down, we'll get to the soft costs section here. The item that I want to point out here is the cost certification. For the AHP program, all projects are required to get a third-party cost certification at project completion to verify the total costs in the development budget. So you don't need a cost certification right out the gate. We're looking for that at project completion, but you'll want to make sure that you have a cost entered here to get that cost certification done. If you are not sure what a cost certification is or have any other questions surrounding that, please feel free to reach out to us. We'd be happy to send you an example of what that looks like. We know a lot of programs using low-income housing tax credits, things like that, may already require those cost certifications. You are welcome to hand us the same cost certification you're providing to your syndicator or other funding sources if it's the same budget. But please make sure that you have some cost here unless you have found someone to do it for free, which would be wonderful. But we'll be checking for that in our reviews. Okay, moving down, gonna get to our last few sections here. I want to talk about developer fees and project reserves. In our developer fees section, projects are allowed to charge a developer and/or consultant fee that totals up to 15% of specific residential costs in the feasibility workbook. We do get a lot of questions about what is it 15% of? There's a whole slew of costs that get removed from the total development cost to come to that number, but they are all listed specifically again in Exhibit A of the implementation plan. So if you'd like to see the full definition and what costs are and aren't included in the development fee calculation or developer fee calculation, please feel free to reference Exhibit A of the implementation plan for that information. Okay, last but not least in here is project reserves. Capitalized reserves that are entered into the project reserve section here are not considered an AHP eligible expense, but if you are incurring them, we do want to make sure they're included here. And then you must include a separate source of funds on the sources of funds worksheet that is going to be able to cover those expenses. So we are unable to fund the capitalized reserves with AHP funds, but you are welcome to enter them here and then just make sure you have other sources of funds that are going to be able to cover those expenses. All right, one last note. I wanted to, I apologize, go back to developer fees for one moment and talk about consultant fees. If you would like, you are able to hire a consultant to assist with your AHP application or the future monitoring requirements. And this fee, again, gets added into the developer fee guidelines. So when we're considering that maximum of 15%, your consultant fee does get considered in there. But this is an AHP eligible expense up to that 15% standard. So if you would like to consider utilizing a consultant for completing this application or, again, the monitoring requirements, you are able to do that and charge that to the AHP funds that you are being awarded. All right. That is the development budget. So that is all of our costs for the project. So this is our capital expenditures to do the rehabilitation, new construction work, or acquisition. So from there, we've covered all of what we're using our money on. Now we need to say how we're going to pay for it. So that is where the sources of funds worksheet comes into play. So with the sources of funds, there are 3 different sections within the sources of funds tab. There is the permanent financing section, the existing debt, and the construction and interim financing section. These sections are all formatted very similar, require a few different pieces of information depending on the type of financing. But we'll start with talking about permanent financing. Your permanent financing are going to be the sources of funds that are ultimately paying for the project at the end of the day. So you may have construction loans, bridge loans, things like that that are going to cover expenses in the interim period while you're under construction. But in this section, we want to know the permanent sources that are ultimately going to pay for this project. So the first source in here, of course, is going to be the AHP subsidy. There are 2 different spaces where the AHP subsidy can be entered. There's the subsidized advance section and the direct subsidy section. So the vast majority of projects that we do are going to be in this direct subsidy category. So assuming you're looking to use the funds as a grant directly towards construction costs, you will be entering it in this direct subsidy section. If you're wanting to use the funds as a subsidized advance, please reach out to us for additional information and we can discuss what that process may look like. But again, in general, the vast majority of projects we see are going to fall under the direct subsidy section. Okay. Within this section as a whole and the permanent financing section, please note that you need to show a need for the AHP subsidy in this section. So if you have applied for or have received sources in excess of the total development costs that are at the bottom of your development budget over here. So right now we've got $6.545 million in expenses. If your sources total out more than that, then we may be reducing or removing the AHP subsidy accordingly. So again, this can include if you have applied for sources in excess of the total development costs. So please be aware that we are checking that to figure out if you are oversourced. So here we want to see that you've got enough sources to cover your expenses. And again, that there is that need for subsidy, that gap in subsidy where the AHP subsidy would come in. When you are filling out your sources here, there are a couple of sources that we have pre-named out. The permanent loan, LIHTC, owner equity, DDF, home funds, things like that. And then we leave a bunch of open spaces here at the bottom for any other sorts of sources of funds. You can see I made up just a few here for our example today. If you do enter any sources of funds down in these blue boxes below, you will have to enter a type in the column in the middle here. So you'll notice if I enter a name and don't enter a type, it's going to highlight yellow and it's going to ask you for the type. And you'll need to select whether it's a loan, a grant, or equity. This is really important to make sure that you select this because if you don't select one there and you upload this feasibility workbook to AHP Online to your application, the system will not recognize it as a source and is not going to give you the option to upload documentation for it. So please make sure to select a type if you enter any sources of funds that are not pre-named up above. Okay. In addition, when we're looking through these sources of funds, we will require that you provide documentation to verify the source amount and any loan terms as applicable for each source of funds. So you can see for my permanent loan here, I've entered an interest rate, the term, the amortization, loan fees, et cetera, et cetera. We will want to make sure that we have documentation to verify the information that you have provided to us. Again, at application, we require that all sources of funds are at least initiated by the time of application. So we recognize that they may not be finalized. You may not have even been approved yet. So when we're looking at documentation, we want to see the preliminary terms on the loan. If you have a letter of interest from the lender, something like that to verify what they expect those terms to be. Those terms can change later if necessary. We understand that interest rates, things like that may change between the time that you get that letter and the time that the loan actually closes. So those things can change, but we do want to see those expected terms so that we can verify the information entered here and make sure the monthly debt service payments are accurate when we're considering the amount of debt service you have in total. Okay. So that is our permanent financing section. Again, we want to make sure that your total permanent sources are equal to the total costs in the development budget. Assuming that they are, you'll see this number down here at the bottom for total permanent sources highlight in green, indicating that you are good. Your total uses equal your total sources, and that is what we want to see. If they do not equal, then the feasibility workbook will not upload to AHP Online. Again, AHP Online has a couple different checkpoints to make sure that the workbook is generally filled out correctly, and that is one of them. So please make sure that your total sources equals your total uses. All right, the next financing section I want to cover is existing debt. I do not have any existing debt entered on this one specifically, but I do want to talk about this here. This section is for any outstanding debt the property currently carries, but it is not debt that was used to pay for the costs in the development budget. So it's not part of covering the capital expenses in your development budget. This is stuff that may be really old from the when the property was built, things like that. So for example, let's say you're applying for an AHP rehabilitation project for a property that was built back in 2000. The property received a USDA loan to build that property in 2000, and you're still paying on that loan. We know those loan terms can go for 30, 40, 50 years. That loan would be considered existing debt. So the initial build of the property is not part of the AHP project. It is not part of the development budget and is therefore not part of the permanent financing, but it is debt that you are making payments on. So you want to make sure to include it in this section. Again, this is important because we want to make sure that we account for that debt service when we're looking at our housing pro forma projections and making sure that the project is staying financially viable over the course of the AHP retention period, which again, we'll talk about the housing pro forma in a second, but want to make sure we're accurately reflecting any debt service that the project currently has, even if it's from pre-existing debt. Again, though, the existing debt, the amount, the rate, the terms, again, we will ask for documentation to confirm the amounts that are entered here. We also understand that loan terms may have changed since the loan was originated. So we'll want to, if you put different terms than what was in the original promissory note or loan agreement, whatever that may be from a while back, then please provide documentation to verify the current loan terms, such as a loan statement. All right, that is existing debt. I'm then going to move to construction and interim financing. So this is our third and final section in the sources of funds. Again, Construction and interim financing are going to be the sources of funds that are going to get you through the construction period. So namely construction loans, if you have any of those, the AHP subsidy is automatically placed down here since we'll be dispersing that during the construction phase of the project. We consider that a construction source that eventually is also going to be a permanent financing source, since it is a grant and does not have any payments and things like that on it. But if you have any sort of construction loans, bridge loans, things like that that are going to be utilized during the construction period and are not included in the permanent financing section, please make sure to include those down here. Again, please make sure that any loan amount, rate, terms, fees, things like that are verified by documentation that you provide to us so that we can make sure that those are within guidelines. All right. That wraps up our sources of funds section. I will note there's explanation boxes at the bottom of every page. So if there's anything that looks weird, any documentation that may not match what is entered in the workbook here, something like that, you are welcome to provide explanations in those boxes at the bottom to help us in our analysis during the application process. So with that, I'm going to move to the housing pro forma. And I know this can look a bit intimidating out the gate if you haven't worked with pro formas much before. Lots of colors, lots of numbers going on. But hopefully we can simplify that a little bit here today. The housing pro forma is a 15-year projection of the expected income and expenses for your project. Our rental projects are subject to a 15-year retention period for the AHP program. During that time, we'll be making sure that the project remains affordable for the tenants that are living there in that 15-year period. So this pro forma is used to ensure that the project remains viable throughout that entire 15-year period. So that's why our pro formas are 15 years specifically. The cells in this chart are color-coded. So any blue cells that you see are the cells you are going to want to focus on. The blue cells are fully editable and should be completed as applicable for your project. So make sure to focus in on those blue cells and fill in anything that is applicable to you. The orange cells that you see, kind of an orangey pink, have formulas that are pre-programmed into them, but you are able to overwrite them. So if you click on them, you can see there's a formula in the upper bar that's pre-populated in, but again, can be overwritten. Those formulas are generally escalators, so revenue, expense, or reserve escalators that are applied to the amount that you enter in the blue cell. So you enter an amount here, we're going to automatically assume that that revenue source is going to increase by this revenue escalator of 2% per year, and it's going to go up and up and up. So that's what that formula does. If that is not accurate, so say the amount of income you get this year is the same amount you're going to get every single year after that, you can override that amount to represent what is accurate to your project. Any yellow cells are fully locked and have formulas that are pre-programmed in, so you cannot overwrite or edit any of the yellow cells. So again, you're going to focus in on the blue cells. Orange cells you are able to overwrite but do not have to. Yellow you are unable to edit. Okay, moving into how to fill out the information on here. We'll start with the cells at the top. We have vacancy and bad debt. Again, we understand that this may be a projection if you are a new construction project and aren't even in operations yet. So we have your year 1 and then your years 2 through 15, since we understand that the lease-up period may have a higher vacancy rate than later years, especially for new construction. And then we have questions about the utilities and who pays those. Again, just helps us with our analysis and making sure that costs seem accurate that are entered into the workbook. Okay, moving down to the income section, we're going to start with scheduled residential rents. This amount should be directly transferred from your completed targeting and income workbook. So as of 2025, all projects are required to fill out a targeting and income workbook or a TIW, as I may refer to it. I'm going to cover the TIW in further detail here in a minute after we finish our discussion of the feasibility workbook. but wanted to point out that that number should come directly from the TIW. Moving down, if you have any of these sources as applicable, please enter those. Rental assistance. The rental assistance line in the housing pro forma here is for applicants that have project-based rental assistance. If you have tenant-based rental assistance, such as Section 8 vouchers, or you may have like a HAP contract or something like that, this information will be included in your targeting and income workbook. So it will end up being included in your scheduled residential rents. So we don't want to double count anything. That'll make a little more sense when I get a TIW open here in a few minutes. But this rental assistance line here is specifically for that project-based rental assistance that is not on a tenant-to-tenant basis and is more just a lump sum assistance program. Okay. When looking at the expenses, again, I just entered some dummy information here for the purposes of today, but we will be verifying that these numbers are accurate to your project. So we want to make sure for projects that are in operation, so if you are actively in operation and are doing rehabilitation or something like that, we are going to ask you for your previous year's financial statement to justify the income and expenses you're listing in your pro forma here. So we want to look at actual financial statements if you do have them and are in operation. If in the application, I do want to note in AHP Online itself, when you open the application and start uploading these documents and it asks you to upload financial statements, the text in the application does currently say that you need to upload 3 years worth of statements. You do not need to do a full 3 years. I apologize. We haven't been able to get the text updated in the application itself yet. We just need a single year of previous year's financial statements. So the 2025 statements, something like that. To verify the expenses here. For projects that are not in operation, so your new construction or you are displacing all of the residents and they will not be returning to the property, so you will not be in operations during construction, we will complete a comparison of the expenses you enter here on a per unit basis to other similar projects in our application pool. Any items that are identified as being significantly above or below average may induce additional questions from us. So we may just ask some questions to verify that the numbers that you're providing are accurate projections of what you will be charging or be charged for those expenses down the line. So just something to be aware of if you do get those questions. After you enter all of your income and expenses here, you'll then move down to our reserves and debt service. A lot of this here, you'll see there's a lot of yellow and orange cells here that are pre-populated. So not a lot necessarily to enter from the blue cell perspective. If you have replacement reserves that you are funding out of project operations, then you will enter those here. You may also enter a reserve escalator if you are expecting the amount you're investing in to increase year over year. And then you'll see, again, a bunch of yellow calculations regarding your debt payments, your deferred developer fee repay, things like that. These are all pulled directly from the sources of funds worksheet. So we look at the sources you entered, we look at the monthly debt service you entered, and we transfer that information over to the housing pro forma to figure out how much cash flow the project has left after taking care of all of those debt services, developer fee repays, as well as any soft debt. If you do have any cash flow payment loans, the information from the sources of funds worksheet does not automatically transfer over because, again, it's dependent on your total cash flow after you've made all the necessary payments beforehand. So we leave that open to you to enter the amount that you will be paying out of your cash flow towards those cash flow payments and soft debt if that is the way that your loan is structured. Okay, again, at the bottom, it's going to calculate a debt coverage ratio or an EGI percentage based on the amount of debt you have to make sure that the project has enough cash flow to sustain itself over that 15-year period. If you do not have enough cash to sustain yourself, you may see some of these things turn red. So after you have entered all your applicable information, you can look through the pro forma as a whole, and you'll notice that it'll flag anything in red. I intentionally left our operating expenses here outside of guidelines so that you can see an example of this. But anything that is outside AHP guidelines will flag in red in the housing pro forma. So you can see our total operating expenses are below our minimum of $3,200 per unit. So that's something to just keep in mind that will eventually require an explanation. All of our guidelines are included on the feasibility analysis worksheet, which we're going to cover in a second. And we will talk about how to provide explanations for those things that may be outside of guidelines. Okay, moving to the services pro forma. When you first enter the services pro forma, I'm going to show you what it will actually look like. So it'll be pretty blank when you first open this up until you answer the question up at the top. Again, we want to differentiate between supportive services versus residential amenities. So costs relating to resident engagement, things like just gatherings and events for the residents, fun community activities, things like that are not considered supportive services generally. These are expenses that we just consider residential housing costs. Supportive services are going to be those non-housing related services like medical services, mental behavioral health services. This could include case management services, things of that form. So if you do have supportive services and will be incurring expenses to provide those services, you'll want to make sure that you're answering yes at the top, and then it's going to ask you to fill out a pro forma regarding your income and expenses for those services. Again, income, expenses, it's not quite as extensive as the housing pro forma, of course. The big thing that I want to point out here, please make sure that your services only are on this tab. Any housing related expenses should be on the housing pro forma. Services expenses should be on the services pro forma. In regards to the income, we will ask for documentation to verify the income sources that are paying for your service expenses. This could include a grant funding contract. If you're using things like donor funds and fundraising, we may look at a 990 to show sufficient fundraising or grant income, things of that form to make sure that you can pay for the expenses that you list below. Okay, I know it's a quick summary on the services pro forma, but if you have any questions, just let us know, and we're happy to talk out what services may look like for your project specifically. Okay, moving to the final tab of the feasibility workbook. This is our feasibility analysis worksheet. So this is where all the guideline items are. This tab does not have any entry fields. There's nothing you need to fill out on this tab. There's nothing you need to necessarily do. It just gives a summary of all the feasibility related AHP guidelines, again, from exhibits A and B of the implementation plan. It's all the guidelines that we analyze via the feasibility workbook. There is red text that appears, as you can see, next to any items that are outside of guidelines. So when the feasibility workbook, this document is uploaded to your application in AHP Online, the system is going to ask you for explanations regarding these items that are outside of guidelines. Page 51 of our application user guide shows you some screenshots of what that screen looks like within the application itself so that you can get an idea before you even get to that point, if you'd like, of how you would be entering those explanations. So just make sure that if anything is outside of guidelines, you have an explanation regarding that, or you've asked us questions if you have any questions about anything that's outside of guidelines and you're not sure what to do with it. We're happy to help where we can. Okay. I know I'm running short on time here. So that covers the feasibility workbook. So again, if you have any project-specific questions, reach out to us. The last thing I want to cover here before we get to any questions that you have is a quick overview of the targeting and income worksheet. Again, I know I've limited us on time here, so I'm going to do my best to cover this as quickly as I can and get you to your next things that you have in your day. But the targeting and income workbook, again, is what's going to be utilized to fill out your scheduled residential rent amount on the housing pro forma. So it tells us the amount of expected rent you would be earning in a year for your pro forma. So the TIW is now required to be filled out by all projects as a reminder, whether you are occupied or not, and you'll see why in a moment. The targeting and income workbook can be found in the same location on our public website as the feasibility workbook. So you can download it. It's just a few download links. It's just a few documents down from the feasibility workbook on the website. The TIW has 3 tabs: Start Here, the Rent Roll Worksheet, and the Rental Project Worksheet. The Rent Roll Worksheet and the Rental Project Worksheet will remain locked and black until you finish the Start Here tab. So please don't panic if you see it's black. You have to finish the Start Here tab before those will open. And you can see I have a field that's left blank here, which is why they are still black. Once you have completed this tab, the applicable tab will unlock. You will not be filling out both of these tabs. So you will only have to fill out one, and this workbook will tell you, the Start Here tab will tell you which one you need to fill out. So please note, it is intentional that you can only fill out one of these tabs. So you'll fill out the basic information at the top for the project. Again, this should match what's entered in your application. And then it is going to ask you if your project is occupied. This is the key question that's going to determine which tab of the workbook you are going to fill out. So if your project is occupied, and I click yes here, you'll see red text show up at the bottom telling me that I need to fill out the rent roll worksheet. If your project is not occupied, you'll see red text at the bottom show up telling you to continue to the rental project worksheet. So that is what's going to tell us today which tab we need to go to. I'm going to talk through both of these briefly, but again, if you have questions further down the line, please let us know. In the targeting section, the one thing I do want to note here, please make sure that the targeting that you enter here matches what you've entered in your application. So there is a targeting section in the scoring. Again, you can refer to the Scoring Commitments webinar from last week to hear more about targeting as a whole and how those points work. But please make sure what you enter here matches so that we're looking at consistent information across the board. Okay. Additionally, there's some additional text to the right that will give you some help in filling out the information here if you do have any issues or have questions. So first, again, I'm going to look at what it would look like for a project that is occupied. It's going to tell us to go to the rent roll worksheet. This worksheet I have pre-filled out again. So this will be blank when you get to it, but wanted to show you what a filled out example looks like. I know there's a lot going on here, but again, once you kind of figure out what you're doing there and how to fill it out, not too bad. So you will be focused on filling out the blue cells in the charts down here. All the stuff off to the right pre-populates based on what you enter on the left in the blue cells. The green text box at the top gives some additional tips for how to fill out the workbook if you have any questions about what needs to be entered in any of the columns. In general, what you're wanting to do is you want to enter a list of the tenants that are occupying the property as of the date that you entered on the Start Here tab. So I entered 5/14/26. So I would say this is the list of tenants that are living on my property as of today. If it is necessary for you to protect the identities of your residents, you are welcome to use initials, just their first names, etc. in the workbook. We understand that there are populations that we definitely want to protect. So feel free to use those initials or just first names like I have done here. If a unit is vacant or market rate, please make sure to indicate that in this type of unit column. You can see I have a few vacant units here. That's going to block out some of the additional information on the right so that you don't need to enter it. So please make sure to do that so that you're not trying to fill in information that we don't need. Okay, in terms of income certification here, quick note, the income cert date is the date when the household was income certified. So that could be the date they moved in, that could be a recertification later on, but that is what this income cert date is here in the middle. So you can see all these pretend tenants are all across the board in terms of when they were income certified, but this helps us determine what income standards to compare against. And then in the annual income column, you're going to enter the income amount, their total income amount as of that certification date. So those should correspond to each other there. The last two columns on the right are for rent. So there's the tenant portion of monthly rent and the total monthly rent. If your tenants do not receive rental assistance, these two numbers will be the same. So we have some tenants here, it's 500 and 500. So they're not receiving any assistance, they're paying the full amount of rent. These two numbers are the same. For those that are receiving assistance, then you'll see those numbers that are different between the two. Once you have entered all your tenants here, their income, their rent amounts, then the worksheet's going to complete an analysis on the right-hand side of the targeting mix, so the targeting categories that the tenants fall into, as well as a comparison of the amount of rent they're being charged versus our maximum affordable rent standards. If there's anything in red in the rent section that indicates that there is somebody who's paying more than the AHP affordable rent off to the right. So that's an indicator that you may have somebody that will have to reduce the rent amount on to meet standards. In addition, with the TIW section at the top, while nothing turns red up here, you want to make sure that the mix of residents that you have are the targeting of the mix of residents that are currently occupying the property is either the same as the targeting that you entered in your application or is more restrictive so that the tenants are at even lower income categories than are required by the targeting on the right-hand side. Okay. So once you have completed all that information, everything looks like it's in guidelines. You're going to go to the top here. There's this box in yellow that says total rent per year if fully occupied. This is the amount that you are going to use in the scheduled residential rents line in the feasibility workbook on the housing pro forma tab. So that yellow box, it'll be a yellow box on the other tab as well. This is what you want to use for the housing pro forma. And there is a note in the feasibility workbook indicating this, or sorry, in the TIW indicating this. So please use that on the housing pro forma. Okay, I'm going to switch again. I know it's kind of a quick overview here to try and get done by 1 o'clock. Switch over here to the rental project worksheet. This is for projects that are not occupied. So this worksheet used to be part of our feasibility workbook, may look familiar for those that have had prior projects to us. This tab was removed from the feasibility workbook and added to our targeting and income workbook to eliminate the need for occupied projects to fill out both this tab and the rent roll worksheet, which they were having to do prior. So that's why you're seeing it here now. The number of units broken out by income category and bedroom size should be entered in the left-hand side on the number of units column here. Again, this is based on your projected targeting that you enter in the application. Please make sure that the targeting you're entering here, again, matches your application or is more restrictive than that if you're expecting your tenants to be even lower than what your targeting requires. The next two columns on the right side are your proposed tenant share of rent and your proposed total rent. If the project does not expect to be receiving a rental assistance contract or otherwise be subsidizing tenant rent, these numbers are going to be the same. For this example, I show what it would look like if they are different. So if the project was receiving rental assistance, which it would be in this case, if your tenants are receiving rental assistance, please make sure that the tenant share of rent reflects only what each tenant is expected to pay. We base our rent standards on the maximum rent standards on what the tenant is paying. So we want to make sure that they're below that standard. If the amount that is being charged from unit to unit varies, please enter averages here. So if you're expecting some people to pay 250, some people are going to pay 300, some are paying 350, you can enter the average of all units here for both your tenant share and your total rent to get an accurate total. Okay. Once you have completed this information here, you again have a yellow box as well that is going to tell you what information to transfer to your housing pro forma. So you'll use this number here in yellow for the scheduled residential rents in the housing pro forma section of the feasibility workbook. Okay. So with that, again, I apologize for moving through so quick. It's amazing how fast time flies. We will go ahead and still answer some questions here. Again, this is being recorded. So if you miss the questions here or need to hop onto a new meeting, something like that, we will publish this online so you can listen to any of the question and answer we've got going on here later. But I will open the floor to Dusty to throw any questions out there that you all have put in the chat.
Hi, Katie. Yes, we do have a few questions here that I will give to you. So one of the questions says, would we allow sources of funds that are listed on a LIHTC application to be reduced if the AHP funding is awarded?
Good question. If those sources have been approved or you've applied for those amounts and get approved for those amounts, most likely not. And I'll let Dusty chime in if she has other thoughts on this as well. But if you are able to get written documentation from that source provider that they are willing to reduce that amount, maybe. So it's kind of a case-by-case scenario based on the documentation that we provide or we are provided. Dusty, do you want to add anything to that?
I would agree with that. Yeah, we expect applications for other funding sources to be the same or similar to the application being submitted to us. If there are any changes, we would just have to have written documentation from basically everybody involved saying that they approve the changes that have come through if it's different on our application.
Thanks, Dusty.
Okay, so let me find what are the other questions. What if supportive services are only for a portion of the units?
So in terms of, did they reference if that's in terms of like the development budget or if they're talking about services pro forma or both?
They didn't reference that. I assume the services pro forma.
Okay. So from the services pro forma perspective, I mean, you'll still fill it out the same way. It's total income versus the expenses for those units. So it doesn't really change the way the services pro forma is necessarily filled out. If you're referring to the way that the non-residential space is broken out, again, that's based on square footage and isn't necessarily based on units that are being served. So the number of units being served doesn't necessarily impact the way the feasibility workbook is filled out.
Thank you, Katie. And I'll just add a comment to that. We don't look terribly into the supportive services in regards to the number of units that are in the project. Basically, we want to know if you are providing supportive services, we just want to know that you have enough income to cover those supportive services. Okay, so another question is, and I'm going to read the question kind of how it's written. I think I know exactly what they're talking about, but regarding the existing debt section, can you bring up the feasibility workbook
Yes.
maybe? Sources of funds on the existing debt section, is this for rehabilitation applications only? I would generally input existing debt that is assumed as a part of a closing into the sources of funds tab and the development budget tab. So do they still need to do that, or is it just on the sources of funds tab?
Yes. So
is that for acquisition who's maybe assuming additional debt when they're purchasing it?
Yes. So yeah, two questions there. I'm going to start with the question about is this only rehab or is it acquisition too? It can be part of an acquisition project as well. So if you are acquiring a project that currently holds debt and you will be assuming that debt, then that is another case where you would have existing debt that you are carrying. So it can be part of an acquisition project as well. It's not just restricted to rehabilitation projects. So yes, that would still be existing debt. From the perspective of whether you need to include it in both the development budget and sources of funds. This is kind of a legacy question. So in previous years, we were requiring projects to put any existing debt they had in the development budget and then also place that amount in the permanent financing section to balance out the sources and uses of funds. To get around that issue because we didn't really want to include existing debt in the development budget since it's not really part of the AHP project. We just needed it in here to represent the debt service and the housing pro forma and your cash flows. That is why we created this separate existing debt section in the sources of funds. So by having this section here, you no longer need to include existing debt in the development budget. So you do not need to put it in the development budget. It only goes into the existing debt section here in the sources of funds worksheet.
Okay. And then we have another question. How often do we need to or are required to recertify income?
Oh, good question. Okay, so you'll notice that in our targeting and income workbook, we don't really specify. I'll go back to the rent roll worksheet here. You can see this income cert date says move in or recertification. We do not require you to recertify residents on a recurring basis. We do recognize that some programs like HUD, USDA, things like that may require you to recertify your residents on a yearly basis or when their income changes, et cetera, et cetera. For the AHP program, you will certify your resident you can do it when they move in. Assuming you get the right documentation when they move in and you do the math right, then you do not need to recertify that resident ever again. So you can recertify them once for the AHP program at move-in, and you can use that documentation for the full 15-year retention period, or as long as that resident is living on your property. So we do not require that they be recertified. Now, if you do recertify on a regular basis and you would like to use the recertification information in these workbooks, you are welcome to do that. So you are welcome to use a more recent certification as well, if that works out better for you and you have cleaner documentation from that front. We are okay with that as well. So really, we don't have any recertification requirements. It is a certify them once for AHP, and then just make sure you hold on to that documentation for as long as that resident is living with you.
And what would you say to projects that have other funding sources that they have to income qualify? Maybe they're using HUD
Yes.
income guidelines.
That is a good point to make here. So HUD programs, USDA programs, things like that, they frequently use a different calculation standard as well as different income guidelines than we may use for the AHP program. So for the AHP program, we use the USDA income limits. So if you are utilizing HUD programs, things like that, you'll want to make sure to look at both of the standards, both of the income maximums for the HUD program as well as for us, the USDA, and make sure you pick the more restrictive one when you are trying to make sure or setting your maximum standards for your residents. So you'll want to check that first. Then when it comes to doing an income calculation or what the annual income amount is, you also want to make sure to utilize the AHP income calculation guidelines. So we do have separate guidelines that tell you how we calculate income for the AHP program that may be different and are sometimes different from HUD programs especially. So HUD may accept certain documents or types of documentation that we are unable to accept for the AHP program. So please make sure when you're doing your AHP calculation, you're doing it according to AHP guidelines, and that when you're doing your HUD calculation, you're doing that based on whatever HUD guidelines or USDA guidelines, whatever program that may be from that front.
Thank you, Katie. You said it much nicer than what I would have. I will just kind of input my own thoughts here. If you have other sources that you say, well, we have to do our income calculation for them, you also have to do your income calculation for us. So if that means you are calculating income 5 different ways, then that may mean that you have to calculate income 5 different ways. Keep different income documents or different folders if that's what you need to for the same household. So if HUD will take a bank statement, then you have a HUD folder for that household with the bank statement. I can tell you we never accept bank statements for anything. So you would keep a different folder and maybe a Social Security award letter for AHP. So keep different folders if you need to. Okay, so another question. Is it correct to say that the rent roll workbook is for rehab only applications and the rental project workbook is for acquisition rehab applications?
Not necessarily. So the big differentiator between the rent roll worksheet and the rental project worksheet is whether the project is occupied or not. So if you are acquiring a property that is currently occupied by residents and are rehabilitating it, then that would still utilize the rent roll worksheet. So it's all about whether the property is occupied, not necessarily whether it's acquisition rehabilitation versus rehabilitation. Most new construction projects, of course, out the gate are going to use rental project worksheet because we're assuming if it's full new construction, nobody's living there because it's being constructed. But again, still isn't necessarily a catch-all. So it is solely based on occupancy of the property. So if the project is occupied, then you will be filling out this workbook. If it is not occupied, then you will fill out the rental project worksheet.
Thank you, Katie. That's all the questions that we have right now. I'm going to wait just a few minutes to see if any other ones come in. I do have something that I would like you to address, if you can, on the feasibility workbook on the
Yes.
housing pro forma. And if you scroll down to the section where it shows the debt, the DCR and the EGI percent, at year 15, that DCR is 2.2. That is awfully, awfully high. And yet we don't have anything showing up as red there. Can you talk about that?
Yes. So for those that have worked with the AHP program before, you may have noticed that if you have high cash flows at the end of year 15, or if your DCR exceeded 1.5 or your EGI, excuse me, was below 85%, I believe, that the boxes, you'd see a lot more red down here going on for showing that you were making too much money in short term. So it's saying we're seeing high cash flows, which indicate you may be able to use your cash flows to pay for the expenses rather than the AHP subsidy. We have recently received additional information from our regulator that they are no longer considering excess cash flows on the need for subsidy analysis for the AHP program. So for 2026 projects moving forward, the guideline of the DCR being over 1.5 being out of guidelines, or the EGI being below 85% being outside of guidelines, has been removed. So you'll see that those pieces of information no longer flag like they may have before if you had previous projects with us. So something we're excited about, appreciate coming down from our regulator. But of course, these items still will flag if you are coming up short on money. So if you are not making enough money to cover all your expenses, then your DCR or your EGI might be outside of guidelines. And that raises a concern for us on a viability front, which is a different issue from that side.
Thank you, Katie. It doesn't look like any additional questions have come in, so I think we are covered for today.
Okay, perfect. Well, again, I appreciate everyone for joining today. Again, this recording will be posted here the next few weeks so that you can reference back to it as you're filling out your workbook. The template is readily available on the public website, so please go ahead and go grab your template and start working on it now so that you're ready to go when the application's open. Again, if you have any questions specific to your own project, just reach out to us via email or phone number or phone call, and we'd be more than happy to help you out. Otherwise, I hope you all enjoy your afternoon, and thank you again for joining.